Gold found its floor. Now, we do know that because suddenly everyone is back in. And guess what? This private credit crisis is there simmering to the surface. And the amount of institutional money, including BlackRock and those kind of people, is seeking gold now for other reasons.
I thought some of the original downward pressure on gold was because China wants to establish a completely physical market. And what you saw happening in China, people were speculating everywhere you look. It's hard to come up with a way of calculating what a real value of gold is. But if you compare it to, let's say, the growth in nominal money supply, you come up with a figure like $18,000. I mean, that may be too low, though, for all the reasons you said. That
surging speculative activity in China, driven by retail investors, ETFs, and leveraged futures, has become a dominant driver of gold's extreme price volatility in early 2026. While physical demand is supported by economic uncertainty, massive leverage buying and rapid profit-taking by Chinese investors have caused sharp market swings, including a record surge followed by a severe slump in late January. Bullion is still up around 80% since the start of 2025, according to Bloomberg, but the March rout was the steepest monthly decline since the 2008 financial crisis. This week's catalysts are US March PPI, weekly jobless claims, and any update on the Hormuz blockade mechanics. Financial market experts Andrew Maguire and Dr. Stephenleeb discuss how gold taking on a central role in the global monetary system. In this video, Andrew Maguire explains that rising oil prices and a stronger petrodollar triggered a rush into the US dollar, creating a shortage that forced investors to sell gold. He mentions this actually proved its strength as the most liquid asset in the crisis. He further notes that countries like China and major Arab nations used this opportunity to convert overvalued dollars into physical gold, hence removing speculative excess from the market. In this analysis, both experts believe currencies will eventually need solid backing, and gold could surge significantly toward $18,000 as the system rebalances. In the discussion, Stephenleeb highlights the key difference between physical and paper gold, suggesting that China is pushing for a purely physical market to reduce speculation beyond platforms. He explains that in a highly leveraged world, only tangible assets like physical gold offer real security and support long-term economic stability. Let's explore the latest insights from Dr. Stephenleeb's recent interview with Andrew Maguire.
There was initial, because of the oil prices, the petrodollar spiking higher, there was an initial race into the dollar. There was a dollar shortage. Everyone was caught out. So we see, but I think, long story short, and everyone said, oh yeah, gold is finished as the hedge. I mean, the mainstream media, the money honeys, and everyone out there saying, you see, gold's no longer the hedge. It actually performed as the quintessential hedge because it was the only liquid first-tier asset that could be tapped instantly to resolve the issues. And then we suddenly look and we see, now when this first spike happened into March the 23rd, WTI was trading at $101. Before, and I'm talking about before the spike higher, overnight, gold was trading $680 higher, and yet WTI was trading at $117. And what that tells us is that in this process, the countries that you just mentioned, China and the Arab nations who have adequate dollars, were literally crystallizing this ballooning higher dollar, this fake price for a dollar, and converting it into physical gold. And that has pushed back. And suddenly we see a new floor has arrived in gold, which is no longer, in fact, we haven't seen this for the longest time, where no speculators were left. And this is to me, this is the absolute perfect point that came out of this. And funnily enough, BlackRock head, Evie Hambro, and I've known him before, he came out this morning on Bloomberg and said, and the money honeys were saying, oh, you see, gold wasn't acting so well. He said, you're wrong. Of course it was acting well. And in fact, and then they said, well, where do you see it going? He said, there's no price cap. There is no price cap on gold. It is the quintessential hedge, and so I think a lot happened in this situation where we focus on the gold and the silver side and the physical and what happened in the crosses, and I think it is so helpful to have seen this washout every now and again. It's really helpful to have. Everyone needs a shake of the head from time to time. We all do. Everyone needs a kick up the bum and say, you know what, maybe we should review everything. Gold found its floor. Now, we do know that because suddenly everyone is back in. And guess what? This private credit crisis is there simmering to the surface. And the amount of institutional money, including BlackRock and those kind of people, is seeking gold now for other reasons. We need to
Sure. Yeah.
this risk. So it's an interesting discussion.
No, it I think is very interesting. And I think, the point that, you've always made is this difference between physical gold and paper gold. I think, I don't know, curious to see your reaction. I mean, basically, I thought some of the original downward pressure on gold was because China wants to establish a completely physical market. And what you saw happening in China, people were speculating, but they weren't speculating on the SGE. They were speculating on jewelry markets. I mean, crazy things. I mean, I think it got a little bit out of hand. And I think China wanted to tame it down because I think gold, yes, I agree with everything that you said. I mean, I think that you can't run this world. And my goodness, what you brought out about the private credit crisis. I remember one of the first times not one of the first times, remember you saying sometime back, a couple of years back, about quadrillions of dollars tied up in derivatives. I mean, how are you going to manage that? Well, whatever kind of leverage you're talking about in this world, and everywhere you look, there's leverage. I mean, there's got to be something that's physical that you could really count on. You can't count on gold priced in dollars. Who knows what that means? I have no idea. When you buy gold that way, I mean, you're not buying gold. You're buying a composite of dollars and gold. China doesn't want that, in my opinion. They want a purely physical commodity. It's necessary, in fact. It's critical for them, in fact, to actually have their citizens have a lot of gold. That basically cushioned the fact that gold went up so much, cushioned their crisis in property. Property prices were going down, and gold, though much, much smaller, as a percentage of wealth in China, gold's rise basically compensated for the fall in property prices. Now China wants to grow. They want their consumer to be, the center of their economy, or certainly close to the center. I think the center. They're not going to get there unless they have much, much higher prices of gold. So, that's their rationale. As you pointed out so well just a second ago, I mean, US, they're going to need something to back up their currency, or else they're going to, implode with all this private credit. It's crazy what's going on in this country in terms of leverage and things like that. Gold is outstandingly manipulated. But you look at oil, to reaffirm your point. I mean, I heard that oil was trading at $200 or $180 in Singapore. Well, on the futures exchanges here, they're trading at 100. I mean, you're getting such disparities. This has to stop. I mean, at a certain point, if we're going to become part of a worldwide community, the U.S., and we must, or else we're not going to survive. As an island, no, we have no chance because of all the reasons you laid out, all this debt, etc. We have to become part of the world. And we have to basically, I know this maybe sounds like heresy, but I'm just trying to sound practical. And I'm just basing this comment on what you just said. If we're going to work out these problems, and I absolutely agree, we have hideous problems right now, all based on this incredible debt that we have. We need desperately a way of backing up our currency. Natural gas is not a long-term solution to anything. I mean, one of the beauties of gold is, ironically, it's not needed for industrial purposes. You're not going to run out of gold. And it's not going to run short of beauty. Those are two constants. You're not going to run out of it, and it's going to be eternally beautiful. So, it's got to have a major role in getting us out. It's going to, back up a lot of debt, but that may take an extraordinarily high price of gold. I'm not sure exactly what that is. I mean, if you just, did a simple study, but just looking at it, because everywhere you look, it's hard to come up with a way of calculating what a real value of gold is. But if you compare it to, let's say, the growth in nominal money supply, you come up with a figure like $18,000.
During the interview, Andrew Maguire explains that strong economies have historically relied on gold. He mentions that while India was allowed to buy a large share, China was denied, which he views as an effort to suppress gold prices. This pushed China to begin a long-term strategy of accumulating gold outside the Western system. Maguire further notes that China encouraged its citizens to steadily buy physical gold, making it accessible across all income levels, and building massive domestic holdings. Through platforms like the Shanghai Gold Exchange, he explains that China has developed a system focused on fully backed physical gold, improving stability and trust compared to paper markets. Regarding the future of the monetary system, Stephenleeb emphasizes that gold will need to play a central role. He suggests that major powers like the US, China, and Russia may eventually align around gold-backed frameworks to restore stability. Stephen warns that without a tangible anchor for currencies, rising debt and geopolitical tensions could destabilize the global economy, while gold provides a practical path toward long-term financial balance. Let's jump into the interview.
You talked about these societies and that have succeeded have always had gold, and I think, now you see that China in 2010 the IMF had their final gold sale, and it was there was 403 tons. India said, please give us to that, we'll pay the market price. They took 200. China said, can we have the other 200? And they were refused. That was the trigger point and why did they refuse them? Because at that time, that gold was then used to suppress the price of gold for everyone else and to deter. The whole reason the COMEX was formed in the first place was to inject unnecessary volatility and take people's mind off gold. It isn't a good performing asset. And any time it rose, they would swamp it with massive derivative gold. So, now China, what they did is they said, okay, you've refused us. Then do you remember this house-sized billboards that went up across America that said, buy gold? And that was the start of a 26-year process where initially it was just the wealthy who could afford gold. And then over the years, what they've done is they've lowered and lowered and lowered the smaller and smaller amounts, made it accessible to everyone. Everyone who has a mouse can now take some of their enormous savings, and Chinese people save a lot of money. And of course, they can click that into gold. And the 25,000 tons, which is conservative, that Chinese citizens hold, which was encouraged to be held by China in the first place, plus, and let's not forget, the 3 trillion in hidden shadow banking reserves, which Brad Setzer referred to. And you wonder why, and people say to me, how do you know they've got at least 40,000 tons salted in the state-held banks? I say, because we see the footprints. Monetary gold does not have to be reported. Now, while they've just reported, we bought 5 tons in March, into the price dip. I'm sorry, but they buy at any price, and they've been buying along the way. And what they did was they said to their citizens, tell you what, you buy gold and now silver as well, you will be rewarded purely on the price appreciation, not because it's going to yield you anything else. It is simply going to accrue in price. And what they did was, through a little bit of adjustments on their currency against the dollar, and they flywheeled it. It's always been trading. Silver always trades at least a $10 premium plus that. Gold always trades at a premium. And then on top of that, you've also got the the much more balanced, less volatile situation. And by opening up the Shanghai, the free trade zone, Shanghai gold corridor to the West, we absolutely know that a lot of refiners, producers, and large institutional players are actually not touching their gold in the West anymore. They're sick and tired of the game. So when you then lodge your physical gold into that SGE corridor, it is physical gold. You have to own it to sell it. You have to own it to vault it. Therefore, it is truly a high quality liquid asset that can be collateralized. And that is what I think you're saying ought to be happening on a global scale.
It has to, Andy. There's no other way around it. I mean, you have to have a basis for agreeing, a basis for pricing things. I mean, or else it becomes ridiculous. I mean, that's why I think, China and the US and Russia getting together, this is going to be, look, Trump, again, I hate to say anything positive about him, but I have to. I mean, in this respect, I mean, he's always been a fan of gold. That's it. I mean, again, a guy that's hard to say positive things about, especially in terms of, what he did in Iran, et cetera. I mean, everything. But he's also been a fan of gold. I mean, these people don't, they're fans because they see it. They see it as an absolute necessity for the world to succeed, and especially for the United States to succeed. If it were just Russia and China, they'd have gold would already be at the center of the world's, global system. We're the missing link. And basically, maybe now we can become a threesome. I mean, that's basically, maybe a simplification, but it's, I think, accurate. We're left out otherwise. And I think that a lot of people in this country agree with you, Andy. I think that the important players in this country, some very important players, agree with you. There's some that, just have their own fanatic craziness that I think have, been holding things up. And, neocons, whatever you want to call them. I mean, they're crazy. I mean, Biden was a victim of them. Trump isn't. I mean, that's a very, very important distinction. I know everyone thinks Biden was a good guy. No, I mean, I don't. I really don't. He hated Putin, wanted to assassinate him, wanted to break up Russia. I mean, this is just crazy thinking. I mean, starting a war. I mean, it's just nuts. No, I think, what you're saying is altogether true. I actually have heard even larger numbers than 25,000 tons for, I've heard public ownership of public ownership of China, of gold in China is about over 30,000 tons. I may be wrong. I mean, you said, I think 25, but I'm agreeing with you. I'm not trying to correct you.
$5,600 per ounce earlier this year. While the market is currently experiencing a healthy cyclical correction or consolidation phase, the long-term structural uptrend remains intact, with several major banks forecasting prices to reach $6,000 to $6,300 by the end of 2026. As countries like China continue to strengthen their physical gold positions and reduce reliance on paper markets, the foundation for a potential monetary reset becomes more visible. If this trend accelerates, gold could reemerge not just as a hedge, but as a central pillar in the future financial architecture, potentially at much higher valuations. If global currencies eventually require real backing, could gold return to the center of the monetary system, and are we already witnessing the early stages of that transformation? Let us know what you think in the comments. If this video brought you any knowledge, give it a like, subscribe, and ring that bell so you're always in the loop. See you in the next video.